There is money sitting in HMRC's account right now that belongs to you. Not a maybe, not a possibility. A documented, confirmed pattern that repeats across millions of UK taxpayers every single year. People who overpaid tax, who were entitled to a refund, and who never received it. Not because HMRC refused to pay, because the people owed the money did not have the right document in their hand at the right moment. Or they had it and never read it properly. Or it arrived through the door and ended up in the recycling. Welcome back to HMRC Update. Today, I want to go through the specific documents that stand between you and money HMRC owes you, what each one is, why it matters, what to check inside it, and what to do if it reveals an overpayment. No padding, no theory, just the documents, the figures, and the action. If you are not subscribed to HMRC Update, please do that now and hit the bell. This channel turns HMRC's own rules into plain English before the deadlines pass. Subscribe. Let us get into it. Document 1. The P60. A P60 is an end-of-year certificate issued by your employer or pension provider. It confirms how much you earned and how much income tax and national insurance were deducted under PAYE during the tax year. Your employer must provide it by 31 May. For the 2025 to 2026 tax year, your P60 should have arrived by 31 May 2026. It is either a paper document from your employer or a digital file in your employee portal. If it has not arrived, contact your payroll department immediately. Employers who fail to issue P60s on time are in breach of their PAYE obligations. Here is what to actually do with it once you have it. Look at two things. First, the tax code in the final box. If it reads 1257L with no prefix, that is likely correct for a straightforward employment. If it shows W1 or M1 as a suffix, BR as a prefix, or any code you do not recognize, emergency tax or an incorrect code was applied to your income throughout the year. That is a red flag for overpayment. Second, check the total income tax deducted against a rough manual calculation. Subtract £12,570 from your gross earnings. Multiply the remainder by 20%. That is approximately the basic rate tax you should have paid if you had no complications. If the figure on the P60 is significantly higher, the difference is worth investigating. Tax overpayments identified from your P60 may be refunded automatically via a P800, or you can generally claim within 4 tax years. The window covering 2022 to 2023 closes on the 5th of April 2027. That is 8 months away. Check it now, not in March. Document 2. The P45. A P45 is given when you stop working for an employer and shows your pay and tax up to the date you left. Parts 2 and 3 must be handed to your new employer when you start a new role. That transfer is the mechanism through which your new employer knows your tax code and how much of your personal allowance you have already used in the current year. When a P45 is not passed on, the new employer applies an emergency tax code. If you start a new job without providing a P45, your employer puts you on a week 1 or month 1 code. This ignores your previous earnings and often results in a tax refund being due later. James started a new job without a P45. His employer put him on an emergency tax code for 3 months before HMRC issued the correct code. During those 3 months, he overpaid £380. That example repeats itself across the country every year, in larger and smaller amounts, for everyone who changed jobs and forgot about the P45. If you changed jobs during 2025 to 2026 and did not provide a P45, check your P60 for emergency code indicators. The overpaid tax can be claimed through your personal tax account at gov.uk. The 4-year window applies. Drop a comment below if you have ever started a new job, been hit with emergency tax, and never reclaimed it, because the number of people in that position who simply absorbed overpayment without knowing they could get it back is significant. Document 3. The P800. A P800 is a tax calculation issued by HMRC that shows whether you have overpaid or underpaid income tax in the UK. The form is sent annually to millions of UK employees, pensioners, and others who pay tax through the PAYE system, usually between June and November following the end of the tax year. In 2026, the process is heavily digitized. If you have a personal tax account, you might receive a notification as early as June. Right now, in August 2026, P800 letters are landing. Some show a refund, some show an underpayment. And almost everyone who receives one simply accepts the figure as correct because it comes from HMRC on official headed paper, and the assumption is that HMRC must have got it right. That assumption is wrong often enough to matter. Before accepting the result, cross-reference the P800 with your own documents. Check the total income against your P60. Check any P45s if you left a job during the year. Specific errors that appear regularly in P800 calculations include ISA interest included in the savings figure when it should not be there, joint account interest assumed to be split 50-50 when the actual ownership is different, a benefit in kind from a previous employer still sitting on the record, and income from a job that ended mid-year treated as if it ran for the full year. Check the figures against your P60, payslips, and P11D. If you believe HMRC has made an error, contact them on 0300 200 3300 with evidence. If the P800 shows a refund and the figures are correct, claim it online through your personal tax account. Online bank transfers arrive within 5 working days. Do not use a third-party claims company. They take between 25% and 40% of the refund for something you can do yourself for free in 10 minutes. If the P800 shows an underpayment and the figures look wrong, call HMRC on 0300 200 3310. HMRC usually collects underpayments under £3,000
by adjusting your tax code for the following year. But if the underlying figure is wrong, the code correction will be wrong too, and you will be overpaying every month until it is fixed. Document 4. The Pension Provider's Annual Statement. If you have made any withdrawal from a pension in the last 4 tax years, this document is the most important one for uncovering a specific type of overpayment. That is, in terms of individual size, one of the largest HMRC routinely generates. Emergency tax on pension withdrawals works like this. When a pension lump sum or first withdrawal is made, the provider does not know your full annual income, so they apply an emergency month 1 tax code, taxing the withdrawal as if you will receive that same amount every single month for the rest of the year. On a £20,000 pension withdrawal, the emergency code can result in over £6,000 in income tax being deducted, where the correct tax might be a few £100 or nothing at all. Your pension provider's annual statement, or a letter they send at the time of withdrawal, shows the total amount taken and the tax deducted. If emergency tax was applied, the correct refund forms are the P55 for a partial withdrawal, where payments have not yet become regular, the P53Z for having emptied a small pension pot while not working, and the P50Z for having stopped work entirely after emptying the pension. All 3 forms are available at gov.uk and submitted directly to HMRC. No third party needed. You will need your P60, which shows the tax you paid in the year to 5 April. The 4-year refund window applies here too. Pension withdrawals made in 2022 to 2023 where emergency tax was applied and never reclaimed still have until the 5th of April 2027 to be corrected. So here is the complete list and what to do with it today. Find your P60 for 2025 to 2026. Check the tax code for emergency indicators. Compare the tax deducted against what your income should have generated. If something looks
wrong, call HMRC on 0300 200 3300. If you changed jobs during 2025 to 2026 and did not pass on your P45, check whether emergency tax was applied to your new employment and reclaimed through your personal tax account. If a P800 has arrived, cross-reference every income figure against your P60 before claiming or paying. Claim refunds directly through your personal tax account at gov.uk. Challenge wrong figures by calling HMRC on 0300 200 3310. If you made a pension withdrawal in the last 4 tax years and have never received a refund on the tax deducted, check your pension provider's statement and submit the relevant refund form at gov.uk. You will not receive an automatic HMRC tax refund if the overpayment cannot be calculated from PAYE records alone. For example, if you need to claim tax relief on expenses or pension contributions that HMRC does not automatically see. That is the core of what this video has covered. HMRC does not always find the overpayment for you. The documents exist, the refund exists, the window to claim is open, but only you can pick up the documents, read what is inside them, and make the claim. Share this with someone who has a P800 sitting unopened on a kitchen counter, or a pension statement they filed without reading. One share could put real money back in someone's pocket. Subscribe to HMRC Update if you are not already here. I will see you